morning. Thank you for joining us. The May insurance data is showing signs of single-digit growth for PSUs like LIC. Individual APA was down 6.5%. Though there was base effect as well. What is your view on the overall growth of the insurance sector?
Good morning. See, LIC is on a very different footing. The first is the base effect. The second is some regulatory changes which happened recently. LIC is largely driven by the agency organization, and agents have a lot of concerns. So LIC has to educate them. And the last quarter, particularly, it affected it in an adverse way. I think that period is now over, and LIC will bounce back. Overall, if you are looking at the insurance sector, I will club both non-life as well as life insurance. The penetration has come down. The reason being that the threat perception has gone down. During COVID, there was a threat perception, and LIC, including all other companies, showed good growth in the insurance coverage. The second thing is the population. Large population is on the fringes. They are on the subsistence level, just above the poverty line. They are not able to afford the insurance. And the third thing is that there is a lot of insurance gap also, which is estimated to be at 83%. That means if somebody needs 1 crore of insurance, they are covered for only 17 lakhs. Unless until these issues are addressed, the penetration will remain low. And I think the regulator is also doing its bit to increase the penetration.
Now, the government is also planning to introduce the Insurance Amendment Act in the upcoming monsoon session. According to you, will this bring structural changes to the insurance sector?
The thing is that any changes which are being brought to the insurance sector is taking into account the current scenarios, the current situation which is on the socioeconomic platform and other things which are happening around us. So any changes are aimed at bringing more transparency, more growth of the structure and the customer protection. So it should be beneficial to all the life insurance as well as general insurance and health insurance companies, whatever changes government is proposing to bring.
Good morning, Mr. Kumar. This is Shrishti also joining in, but just wanted to take that point forward with respect to the Insurance Amendment Bill. One of the other provisions that could likely be at play is to allow the open architecture for individual agents. Help us understand that how will this impact the overall sector? How do you think that this will impact the large life insurance players and specifically LIC?
Srishti, I mean, my personal view is it's not a good idea. The thing is, what will be the incentive for any insurance company to recruit agents? That's number one. Number two, I feel that it may lead to poaching of agents through dubious means like giving underhand kind of incentives, or it may lead to the mis-selling also. So there are a number of issues, and one particularly for LIC, which is a structurally totally different from many other insurance companies. We are having a cadre called development officers, whose wage structures totally depend upon the recruitment of agents, retention of agents, and their productivity. How they are going to be handled? I mean, if we want to increase the number, penetration as well as the insurance coverage, we need to have more agents in the market. Whatever digital means are there, I feel that agents cannot be wished away in the long run, and industry need to have more and more number of agents in the system rather than sticking to a certain number where nobody will be interested in recruiting more agents, and they will be more interested in poaching agents from the earlier which are there in the system.
Right, Mr. Kumar. Hi, this is Nehi also joining in. Just want to probe a little bit further on this Insurance Act Amendment Bill, because the proposed bill also talks about allowing value-added services. How do you think this will help insurance companies in terms of customer engagement, margins, and any impact on overall profitability?
You see, insurance industry has to evolve with the overall scenario. It's a good idea to have value-added services along with the insurance, And there is enough expertise available in the insurance sector in the form of actuaries. They will be able to devise products which will take care of the customers. They will take care of the margins. They will take care of the risk coverage. Everything they will be able to do it. I think this will be a very good idea to go for value-added services in the insurance sector. But I think these will be mainly in the general insurance sector rather than in the life insurance sector, which is totally differently structured.
Okay, so that's the take on the impact if services are also clubbed in. But sir, also help us understand that RBI has allowed strips now in the state government bonds. How will this allow insurance companies to manage cash flows and align their income from investments in terms of future payouts to policyholders?
The insurance industry is highly governed by the regulations about the investment particularly. So you see, I mean, in the life insurance particularly, the more investments are in the debt segment, the more secure a company is considered to be in terms of its stability and profitability in the longer run. The other thing is the actuarial principles, the designing of the product, the loadings of the on the premiums, etc., which actuarial teams have to take care of. Coupled with that is the risk management in related to the investments. So I feel the industry is ready to look at all kind of new avenues which are coming in the investment horizon, and they will be able to take benefit out of it.
There was a in general concern for the insurance sector that post-COVID, the premium claims had gone higher, and then the underlying cost of buying life insurance had gone through the roof, and affordability was not catching up. Is there merit in thinking like this?
Definitely, during COVID, the claims had gone up. There is no denial to that fact. But as far as LIC, because I was at that time as managing director of the corporation, when we looked at our portfolio, we found out that the claims which were reported to Life Insurance Corporation were within our assumptions. Although we made a provision of 7,500 crore for the COVID claims, but ultimately in 2 or 3 years' time, we have to reverse those provisions because our claims are within that. So it is the assumptions by the actuarial team which plays a major role. Of course, a COVID kind of situation cannot be predicted. So there was a stress, of course, and some of the companies did report higher claims than the what was built up in the premium structure. So there was a revision of the premiums, upward revision in the premiums, particularly in the term insurance premiums policies.
Okay, and Mr. Kumar, before we let you go, just a quick take on what you are making of this new provision that's come out, and what's your view on IRDAI's proposal to now allow insurance companies to invest in gold and silver ETFs, and who do you think could benefit the most from that?
See, life insurance segment, as I said, is highly governed by the Insurance Act as well as the regulations by the regulator in terms of the investments. Particularly, life insurance premiums are to be invested either in government securities or the SDLs, which should not be less than 50% of both put together. And the rest they can invest in as per their choice. But as I said, more the debt instruments investments, the more the company is considered as secure. Now, I think this will be in gold and silver ETFs. They may be allowing it in the ULIPs. ULIPs are a different kind of products where the investment pattern is decided upfront. It is not governed by the Insurance Act or IRD regulations. So the investment pattern is already known to the customer. I think it's a very good move because the gold ETFs and silver ETFs have given good returns in the past, and they are expected to do well in the future also. It is beneficial to those customers who are a little risk averse. They don't want to put money in the equities or in the debt also. Sometimes they feel the returns are low. So averaging between the equities as the debt, I think the ETFs are a very good choice, and there is a great market which will open up for the investors, the people for the insurance policies in terms of ULIPs.
Okay, Mr. Kumar, appreciate that view, and thank you so much for joining us on the show and taking the time out to speak to us at ET Now this morning.
Thank you so much,
Thanks so much.
all of you.
Let's move on from that and throw the light on India's quick commerce and food delivery space, how the unit economics here are shaping up.